Hello and welcome to this week's episode of Conservative ETF Investor. This is April 29th, 2017, and we will be going over the stock market update recap for the week and our trade recommendations. You can find us at conservativeetfinvestor.wixsite.com/investor. And here's our homepage right here. Oh, and um, when you are looking at this on YouTube and you want to see the video in the highest quality, make sure you click over here at the settings button and make sure that you are on the quality, you're at the highest quality setting. All right, so that's it for that. So here on our home page, when you go to our home page, you can click right here to get the this week's video link. We'll upload that as soon as we're done with this video for the current week. Otherwise, you'll be looking at last week's one right here. And here is our current recommendations all ready for the week, April 29th. And you'll see that we are all still remaining on hold signals for the week. We've added a new column here, which is the beta. So it gives you the beta for each one of our ETFs. These are the 7 ETFs that we follow right here, the indexes that we follow. And our current posture is hold. We have hold, and these are our buy recommendations and the dates that we recommended that. This is the price that the ETF was trading at on those buy recommendations. And this is the current closing price as of Friday, just yesterday. And here's your profit and loss right here. And here's your percentage profit and loss for each position. You see the greatest percentage gain that we've had is right here on QQQ. So that's the NASDAQ 100 technology, 37% gain since the buy recommendation. And here's all your dividend information on the next, the previous ex-dividend dates are all in this column. The next ex-dividend date would be this column here, so approximately these dates here. And your total return with the ETF gaining share value as well as dividends is this column right here. So this is for each one of the ETFs. Now, I'm going to take you to the portfolio as of this year, 2017. The portfolio is up 5.75%, not including dividends, and the total of the dividends is this right here. It's 1.17% in our ratios that are on our portfolio ideas. Just so that you know, when you go to our portfolio ideas, we have our recommended portfolio, and that is a 20% in the S&P 500, 10% in the NASDAQ 100, 10% in the Russell 2000, 15% all world excluding United States, 25% in bonds, 15% in real estate, 5% in precious metals, gold. Okay, so that is our current recommendations. And so for 2017, we're up 5.75%. When you add that to the, let me go back to the home page. Actually, you can see it right here also on current recommendations. You'll see that the dividends is about 1.17%, and if you add that, but that's total since inception, so I'm not sure what it is year to date, but if you put 1% on top of this, you'll get about 6.7%, and the S&P 500, which is symbol SPY, this column right here, is up 6.25% plus dividends, and the dividends on the S&P 500 is approximately 1.03%. So you'll see that we're pretty much, our portfolio is pretty close to the S&P 500. Maybe it's lagging the S&P 500 a small amount, because you see that we're 5.75 and this one's 6.25. So it's about a 0.5% down from the S&P 500. But the benefit is that the S&P 500 has a beta of 1. This measures the volatility. Here's our betas, and with our percentage allocations, our total portfolio beta has a total portfolio beta of 0.63, which is a very, very good beta. Okay, and here is our portfolio since inception. Since our current most recent buy recommendations is up 12.83, and you see that we're pretty much exactly matching the S&P 500 with a lower beta. Okay, now that we've given you all of that information and you know that our current posture is all on hold recommendations, we're going to take you over to the charts, and we are going to start with the S&P 500. We look at the weekly charts. You see right there, weekly, and that tells us what's going on. This is a 5-year chart right here. So we're going back 5 years, and it's a weekly candlestick chart. So each one of these candlesticks represents 1 week. And you'll see that the trading pattern that we're in is somewhat of a rising wedge, and the S&P 500 is just kind of pushing up right against that top resistance line of the rising wedge. The S&P 500 has gained 1.49% for the week. Scrolling down here, you'll see that in the thumbnail, our MACD, this one here is our moving average convergence divergence indicator, has bottomed and is turning up and in getting ready to cross that signal line. Hasn't crossed it yet, but it is looking more in a bullish position. The caveat to that is that this is pretty much very close to the top of the range, and we were expecting this to drop down more before it decided to come back up. So we're not sure how much more power this stock market has left in it before we see some more signs of a correction or a little bit softening here. The slow stochastics has also bottomed and is pointing up and has turned positive. You can see the numbers right here that the slow stochastics is 71.65 and the signal line is 69.46. So we have absolutely gone positive on the slow stochastics, meaning that momentum is now on the side of the ETF, meaning that we do expect stronger prices. So it's poised to break through this line. All we can do is wait and see. We're obviously still on a hold recommendation. Let's move over to the next ETF, which is the NASDAQ 100, symbol QQQ, otherwise known as the cubes. Oh, by the way, I should say that the SPY ETF, we refer to that one as the spiders. So if we use the term spiders ETF, we're talking about the S&P 500. If we use the term cubes ETF, we're talking about the NASDAQ 100 because it's symbol QQQ. Now that's had a very strong week, 2.59% up for the week. And you'll see that on the cubes, we have actually broken above this rising trend channel right here, which was a resistance line. Now, which once acted as resistance will now act as support. So this potentially could come down, touch that support line, and if it holds and bounces up, that would be a very, very bullish sign that this support line is intact and going to go through. If it comes back down through that resistance line, then it's back in this trading channel right here. Now you'll see here in the thumbnail on the MACD that the MACD has never crossed below its signal line, bottomed and came back up and is still rising, but it's still in that very high overbought condition for the MACD. The slow stochastics has also bottomed and has crossed above its signal line officially, and it's poised to go up higher. So the NASDAQ 100 is poised for stronger up moves here. Only time will tell, so we will see what that portrays. Let's move on to our next ETF, which is going to be the Russell 2000. So let's go ahead and look at the weekly chart for the Russell 2000. And let me scroll down so we can see as much of that as possible. Okay, so the Russell 2000 went up 1.35% for the week. We are clearly inside of this rising trend channel, about halfway. This particular candlestick, you can see it in the thumbnail here, is kind of like a shooting star where it kind of shot up where the bulls were taking control, and then the bears got the better half of it and then shot it back down. It has a terminology of a shooting star, and the way that you can see that we've gapped here. So the question is it a breakaway gap, or is it possibly an island top where it's just going to come back down? It's it's difficult to say, but the reason why this could appear to be a breakaway gap is because of this reason right here. The MACD has bottomed and is turning back up. The slow stochastic has not only turned back up, but it is now positive against its signal line. These are very bullish indicators, indicating that this ETF is definitely poised to come up and touch the top of that channel right there. So we still are on a hold recommendation across the board, so we're holding the Russell 2000, symbol IWM. Let's move on to our next ETF, index ETF, which is VEU. VEU is all world, excluding the United States, traded by Vanguard, our favorite company. Now, what is happening here? Not only did we get a gap up, but we are right at a critical juncture here. This here is it's kind of like a declining tops trend line because this line is slightly poised down. We are right at that resistance line, and we are at the resistance line of this rising trend channel. So if this ETF is going to break above this, that would be a really strong sign. It's poised to do so, just like the other ETFs, because we've bottomed and is coming up on the MACD, and we've bottomed and turned positive on the slow stochastic, and we are above its signal line on the slow stochastic. All very bullish signs. We will wait and see what this ETF has to show us. That's symbol VEU. All right, let's move on to the next one. TLT, 20-year Treasury bonds. Bonds lost some ground last week. They went down about 1%, 0.96%. And you can see this declining tops trend line right there, how we came up, kissed it, and then backed off of it. So right now we have a support level at this juncture here, and we have a declining tops trend line. Momentum is on the side of the ETF. For the MACD, you can see that we have bottomed, we are traveling north on that one. But on the slow stochastics, you can see here in the thumbnail, we've topped and we've started to come down. We're still positive, we haven't crossed below its signal line, but it looks like if it maintains its current trajectory, it's going to start softening and coming down. We're still on a hold recommendation for TLT. let's move on to our next ETF, which is going to be VNQ, which is the Vanguard REIT Real Estate Investment Trust. We've lost 2.71% for the week. You can see you can see it really clearly here. You see that candlestick coming down? It was a big down week for the REITs. We came up to this top resistance line right there, kissed it, and backed off of it. We have a rising bottoms trend channel right here. So we're in this trading range between this tops line right here and this rising bottom. We'll see where we can get some support and bounce off of it. The MACD has topped and is traveling down but hasn't crossed below its signal line, and the slow stochastic has topped, also traveling down but has not crossed below its signal line. It appears currently that we may come down and test this rising bottoms trend channel. There's also this support line right here, so we could potentially come down, touch that, and then bounce off of it, and then go from there. So we will wait and see what the VNQ has to offer. The next one and the last ETF for today is gold. GLD, we have our declining tops trend line, and what did we do? We came up, kissed it, and then backed off. For the week, we have lost 1.26% for GLD, and you can see here in the thumbnail how we came up, touched that declining trend line, and backed off. Now let's look at our momentum indicators. The MACD is positive and looking strong, whereas the slow stochastic has topped and is now below its signal line. So we're seeing some softening here. We may see some sideways movement or a little bit of softening before we go back up. But we need to get above this declining tops trend line for us to be very, very bullish on gold. We still have a hold recommendation on a buy, so we're still in this ETF. Now, let's go over to our volatility indicators. First one is going to be the VIX. So this is the volatility of the S&P 500, and you can see that we're doing pretty good here. Our 50-day is our 50-day EMA, which is the blue line. The red one is our 200-day exponential moving average. We use these lines in order to give us an indication of momentum. And you'll see that on the 50-day, which is still below the 200-day, which is bullish for stocks, has topped and is traveling down. So it is not going to be crossing above that 200-day. Not only that, look at the way the VIX indicator gapped down and is traveling below the 50, dragging that 50 down with it. All bullish indicators for stocks. You can see here that the MACD is just traveling down. That's below zero. It's in negative territory. Again, bullish for stocks. And stocks, this is the S&P 500, the chart here at the bottom. You'll see that as this came down, stocks went up. So that's bullish right now for the VIX indicator. Now let's look at the volatility for the NASDAQ 100. This is the VXN indicator. The same thing as the VIX for the S&P, but this tracks specifically the NASDAQ 100. Same thing. You can see that the 50 is below the 200-day, bullish for stocks. We've gapped down. We're staying down below the 50, bringing the MACD down with it. And what is happening to the NASDAQ 100? It is just on a nice trajectory up. This is the bottom symbol here. The bottom chart here is QQQ, the NASDAQ 100. So this is the volatility indicator for the NASDAQ 100, and here's the actual NASDAQ 100, and it is doing just fine. So that pretty much wraps up this week's report for Conservative ETF Investor. Please recommend a friend, and keep watching and subscribe to the channel. Thank you very much for watching this week's video.